Hello and a very warm welcome to Moneycontrol.com. As part of our pre-budget series, today we are speaking with someone who has been intricately involved in the budget making process to get us some more perspective on what are the considerations that weigh on the minds of policymakers as they put together a budget. And of course, we cannot not ask Mr. Atanu Chakraborty, the chairperson of HDFC Bank, about the HDFC and HDFC Bank merger. Mr. Chakraborty, thank you so much for joining us. Delighted to have you here with us on Money Control. Let me begin by asking you, 2023, we're barely into the new year and we have a budget that's coming up in less than 2 weeks. Just put yourself in the shoes of the finance minister right now. According to you, what must be weighing on her mind at the moment as she puts together this budget?
Well, the budget normally, which comes on the 1st of February, hardly leaves the budget makers any time to have a New Year party. It just comes in and there's such a long, intricate process of consultations, putting the numbers together, putting the policies together, because this is one document where all the policy directions and the numbers, they come together. So there's a huge bit of realism, and that's why the interest as well, not only in India, but global also. Few things that this year one would see is the last year penultimate budget of this edition of India government.
Correct.
And virtually the last main budget, because the next year budget would be just before election, will have its own limitations.
Absolutely.
So that limits the hands on large scale reforms.
Okay.
That would be limited. I do not expect. And that means that we have a backdrop of high fiscal deficit, which now needs to be reined in. They are working hard on that. At the same time, they'll have to continue with the capex because that has yielded dividends, that is bringing in infrastructure, which is much needed, as well as continuing farmer-related policies. For example, the issues of MSP, which is because of inflation, perhaps would need some correction. And lastly, the middle class, the personal income tax, which perhaps might call for some amount of downward correction because corporate tax being already corrected. But again, all put together, high interest because of very high debt to GDP ratio do put certain limitations because the elbow room is limited, which means more efficient tax collection. That also has its limitation because in 1 year you can only do as much. So it's going to be a balancing game throughout the year as to what is prepared in the budget estimates and how the year progresses.
Right. So there is a lot of talk right now about continuing with the schemes that were announced during the pandemic, especially targeted towards those at the bottom of the pyramid. And considering this is going to be the last budget before elections, we are going to see a compulsion to continue with those schemes as well. And when it comes to the revenue collections, while there have been a buoyancy in the tax collections, we know that divestment hasn't really added up. So in terms of fiscal math, Mr. Chakraborty, how do you think what according to you should be the key priorities for this government as it presents its last budget before it goes for elections next year?
See, the Garib Kalyan Yojana was a great success, especially the food component.
Sure.
Now that has been hardwired into the food subsidy program already. Therefore, I do not see much load on food subsidy side, marginal load which has already come in. To that extent, that part gets taken care of. And also the schemes like ECLGS, etc., which were very successful, and the banking sector remained in the pink of health because of that kind of a lending. it has also spawned large number of government schemes which are guarantee based and not subvention based, which meant direct outflow of cash.
Sure.
So a better credit quality by public sector banks would ensure that the load on guarantees is less. To that extent, I do not see a conflict between the ongoing government programs
Okay.
and managing the fiscal maths. Is the interest rates which are high on the borrowing already, the current borrowing, that affects the cash flow more than anything else. On the revenue side, I do agree with you, buoyancy as well as the tax efficiency
Right.
is where some amount of delta can come. How much? We'll have to see during the course of the year. On divestment, while large-scale divestments would be limited, as I mentioned, being the last year, all governments are very careful so as not to have any controversy, so as to say. But there are minorities stake sale. After all, public sector units, their market cap is 7 to 10% of the total market cap of the, all companies put together. They're selling minority shares not only meets the overall objective of divestment, it's a correct thing to do. The monetization of these companies and bringing that for the welfare program is the ideal thing, if you ask me.
Okay. So, what are the concerns that bother you as someone who has been in the driving seat, and you worked very closely with Mr. Jaitley and drafted some of the most significant budgets of this government? What are the key concerns that drive you at the moment, and according to you should drive the policymakers at this point?
Well, policymakers have access to much better data and the realities as they have as compared to a commoner like me. However, few of the things, as I mentioned, the concerns have to be that government bore the brunt of keeping the growth up during the period of 1920, 2021, 2022, 23. Now with the green shoots in the capex by the corporate sector, as I see it, because they are now already on the high side of capacity utilization in the range of 70s already. And they would at least start with debottlenecking, if not large capacity addition. Some of them are planning capacity addition. And there is a pressure on credit. Therefore, important thing is to provide them space for credit expansion, which goes to the private sector. That's a critical part if we have to sustain growth, because growth is the key. We need to sustain growth. Beyond the base effect, which is more or less gone. First quarter might see some base effect. We will not have much. However, for that, the crowding out of private sector investment should not happen. And second concern is, of course, inflation, which, of course, RBI had been very, very proactive. But it's a sticky inflation. It eats into poor much more than anybody else.
Right.
And we also have to keep our domestic consumption continuously up, which is all. Therefore, it's more important that the inflation is tamed, both through fiscal means as well as primarily through monetary means, because that's what the remit of the policy is. That brings in enough surplus towards consumption and keeps our growth rate up, which naturally brings in, private sector investment will bring in more jobs, and capex has to keep going up. So these are would be the pillars, if you ask me, which should be driving any budget. Or for that matter, any sort of overall economic policy statement.
Okay, so private investment and inflation, because
Private investment, inflation, and keeping the consumption up,
right.
which only in a low inflationary situation happens.
Absolutely, absolutely.
That's where housing sector or capital goods, which are on the expensive side.
Right.
Washing machines or refrigerators, televisions. These are the kind of things which are bought across all strata of the society.
Of course. So, putting more money in the hands of the people, the middle class has been feeling a bit left out. The other day, we heard the finance minister say that she belongs to the middle class, and she said that we've invested in infrastructure projects that helps the middle class as well. Do you think there is fiscal room available for the government to specifically target the middle class at this time? I'm talking about maybe revising the income tax rates, maybe putting together a scheme where you can, where the middle class that lost out jobs during the pandemic can be given a benefit, something on the lines of what the United States has. Is there room for that?
Finance minister did a beautiful sequencing, though not many people would have agreed, of first bringing the corporate rates down and then trying to restructure the personal income tax regime. We see the impact of the corporate tax already in terms of their capacity to bring in credit. So that job having been done, I guess, and I'm pretty contrarian when I say that, because not most of people say that when there is a fiscal constraint, why should you bring the taxes down? There is a room, I feel, for starting a program of gradual rationalization of personal income taxes, because it's not the rich who should benefit. Like in US, it always happens. But up to a certain slabs, up to certain rates, perhaps the rates coming down would spur consumption, which will bring back the taxes. And if the consumption goes up, investment would go up, employment would increase. So there would be a virtual cycle or a virtuous cycle, shall we say, in this entire thing. So a gradual program starting from this year, because everybody expects the Prime Minister to come back after 24 again.
Sure.
So I guess, and normally such continuity always takes place.
So there is fiscal room, you think, to make this revision?
Well, if the Liz Truss experiment would scare many in UK. So, however, that was not gradually done. A very gradual experimentation at certain slabs would bring back, will give the necessary kick to consumption. Okay. So that should balance.
So as we speak, there is a World Economic Forum that's going on. Global leaders are meeting in Davos, and everyone's talking about India. Everyone's talking about how India is the bright spot in a world that's facing a recession. Do you share that optimism?
Well, first the realism dose. We are a $2,500 economy yet. Prime Minister has really built up and given it a status where people are willing to look. Now we'll have to pull ourselves from bootstraps to now match that feeling of hope that people have from India, because we are keeping up the kind of growth rate, and that came from management of pre-COVID economy, digitization, formalization of economy, keeping the reform push, very deft management during COVID and post-COVID inflation.
Sure.
So while experts would differ into something else could have been done, but I'll give high A's to the government on that management. And that is what brings the hope. However, our consumption is nowhere near China, which is 3 times our. So the growth path is critical. And our growth mercifully comes from domestic consumption, because I don't see a great hope in the world growth rate or exports. which must continue, and PLI scheme and those kind of things
Right.
are key to it. However, important thing is domestic consumption and further ease of doing business. Now, formalization, taxation, and the great success of things like UPI has made transactions easy.
Sure.
However, what is difficult today is, and if you ask anybody, is the land related issue. So
Right.
both construction sector, housing sector, and infrastructure sector and investment ultimately come a cropper. I guess something around titles there, land titles there, and giving some amount of state protection to the land titles. After all, it's a state subject, but I guess both state and federal government have to go together on that. Would be very critical for India to leapfrog now,
Okay.
for which we must lay a foundation.
Right. So there is also a lot of talk about the China plus one strategy that India is hoping to capitalize on. You've outlined some of the issues that India needs to sort out, but overarchingly speaking, what is your view in terms of from a policy perspective and the budget perspective? Can India give more incentives for businesses to come in and set shop here?
PLI having been done already and being offered in certain cases, businesses tend to move in a place where there is consumption.
Sure.
And we should not take our good consumption base lightly and try to keep increasing. China has a huge consumption, and that's also one of the reasons people located them there. And then they had a huge financial support coming out of Hong Kong.
Right.
Which GIFT is trying to become, but it has a long way to go. So development of GIFT would be very important to create a dollar territory. However, important thing would be that our consumption remains pretty high. Otherwise, people would have choices in picking up a number of smaller countries like Vietnam, like Philippines, and they would tend to go there and use them as a base to supply to China or markets like India. It's only when your market appeals to people,
Right.
then the manufacturer also comes in there, because that has obvious lower logistic costs. So that I think we must not lose sight of.
Okay. There has been an economic backlash of sorts against China as well, considering the tensions that we've been seeing at our border. We've seen, different measures being deployed. On one hand, against Chinese companies. Plus, we've also seen approvals for Chinese companies to come and set shop here. How are you viewing this whole economic, balancing act with China?
Well, all companies would now start exploring India.
Right.
And I see many more are exploring India for their products. Shifting shop would be, well, some would look at a China one strategy, as you mentioned. But China plus one is not necessarily China plus India. We'll have to
Absolutely.
be there to provide that. It could be China plus Taiwan, it could be China plus Philippines, or China plus X.
Right.
So when they are exploring India, we should appear to be a natural choice, both on account of our market as well as on account of ease of business, of which first part, that is transactional ease, is much better. Is a much more formalized economy. There are various surrogate parameters. To put a hand on a specific parameter is difficult, but experts and pundits would generally agree. But land and titles is one issue which would make investment easy. Infrastructure, godowns, logistics, there's a second part, which is India now offers a fairly stable political scenario to people world over, both at state and central levels, which I think is a big plus for the world when they look from the political risk point of view.
Sure.
So there India becomes a very, very natural and ideal choice. But when the eyes fall in India, we should be able to capture those eyeballs.
Yeah, absolutely. Now, my question was also on the economic backlash of India against Chinese companies. We've seen raids on Chinese telecom companies in India. What's your view on that?
Well, Chinese companies have a deep issues related to their connection to the state, whether it's PLA or the government. They are indistinguishable. To that extent, we must, our companies must follow the anti-money laundering and anti-terrorism sort of structure which has been put. That to some extent would make it very clear that whether those companies are being driven by politically exposed personnel or not. That to a large extent would take care of this problem.
Okay.
It sounds technical, but the framework is very much available on what is known as AML CFT regime.
Right.
And our companies, both on the BFSI sector as well as the manufacturing sector, should remain extremely mindful of that. That would take care of the non-desirable kind of Chinese company coming in, because they are
So should not be a blanket push, you're saying,
You
against.
can't have a blanket.
Not
push.
possible.
It's
Absolutely.
never done, and I think it's not desirable either. But a push, we are not at war with them.
Fair
We
enough.
have differences with them, and, which results in skirmishes and so on and so forth. But we also carry on business with them.
Absolutely.
But where the threat comes, we should close those paths, and you will see 80% of the undesirables would get cut out. Thereafter would be the trade-related issues where they put non-tariff measures. They will be retaliated. I think our Ministry of Commerce is
Right.
and there they are moving through FTAs, so they are creating a good strategy for that. So that alternative means for sourcing for our companies as well as consumers in India is available. After all, India is not going to produce everything.
Absolutely. So there is also a call for heightened import tariffs, right? Especially on products that are coming in from China. There is one school of thought that says that that's protectionism that India should avoid. In fact, MSMEs are also against it. But then there is another a group of trade economists, pundits, you call them whatever you want to, but they are saying that no, we should not follow protectionism. You should let it be a free market. I wanted to get your view on this.
I am always a supporter of low tariff barriers and
Okay.
raised as a retaliation. That is on dumping. B, wherever there is clear evidence and they are available on non-tariff barriers. If some country is raising non-tariff barriers, I think we can retaliate with tariff barriers as well as non-tariff barriers. So there's no harm, because then the country is not following the globally accepted trade norms.
Okay. Does the prospect of a global recession worry you, or do you think India is protected and we will not see such an adverse reaction to the global economy as the rest of the world?
Well, there is generally a chatter that we are an island not affected by the happenings in the world. We are not North Korea. We are, and we would like to be connected with them. We want flows coming into the country. We want. Therefore, first, anything happening in the globe is going to affect us willy-nilly in some fashion.
Right.
What protects us is our consumption,
Sure.
which drives, because largely the growth comes from consumption. But the export scenario would not be as strong this year as previously because of the global growth rates, as IMF has also projected, and generally there has been agreement. The senior bankers in US are already talking about recession. I do expect recession not to be a quarter deep at most. However, what comes in future is something. It has probability attached to it on three major events: COVID, war and inflation itself as
Absolutely.
to how the inflation is being tackled across the globe. Though I see a very synchronized action across the globe or inflation itself, but that would limit some amount of demand. But I see IT sector being conversely affected because you would have seen layoffs in
Absolutely.
US.
Sure.
That should bring more business into India because they'd like to cut cost. So I see a positive
Silver
impact,
lining.
and that's our major export earner. However, rest there would be questions, but inequalities which COVID brought.
Right.
There were inequalities before, but
Sure.
COVID heightened it or accentuated it, shall I say. That means that many high-end products like iPhones would continue to sell in the advanced economies.
Fair enough.
And if we keep producing here, which we have started, such kind of products, I have just named one, to that extent we would be continuously protecting ourselves on external sector. The second part is how the currencies behave. And the dollar is strong, would continue to be strong. So important thing is there is a lot of dollar inflow into the country. That could happen simultaneous with our bond market development.
Okay.
If the bond market is developed, then we would very quickly get into the global indices of passive funds for bonds, and a large inflow of money would take place from there. Apart from the fact that we are already onto the emerging market funds for the equity side. So our company is now picking up further additions and growth. That brings in the money on the investment side.
Right.
FDI sides we have been keeping even, so if our domestic consumption keeps going on, to that extent we'll keep getting FDI, as also from the China +1 strategy would give us certainly that incremental FDI. So on the investment side, I see development of bond market should get us a good hefty chunk if we can ride into the global bond indices. That should help, and it also help us in shoring up our dollar reserves, because
Sure.
the dollar would come.
What's your outlook on the rupee? There's been a lot of concern. That, again, two views. Should we let it fall? Should we let it find its correct value? Is it saving our economy right now because it's giving us the export advantage? And what's your outlook on the rupee? And going forward, especially for 2023, how are you viewing our currency management?
Well, currency management being the preserve of RBI, and it largely allows it to float, except for whenever they have to make intervention on volatilities.
Sure.
So I think what they are doing is concentrating on volatilities. Rest they are allowing the market forces to play, and I think by the book that's the best way to do.
Okay.
Then it reflects the economy. So, and the rupee has done rather well. We all thought that perhaps the hell will break loose. Nothing of that sort happened.
Okay.
Apart from the fact that volatilities were taken care of, there a good reserve helped. So important thing is, as you build up your economy, the reserves get built up, and that reserve acts as a buffer, which has a counter-cyclical nature in itself. So
Okay.
that should take care.
What is your outlook going forward when it comes to growth, inflation, rupee? Do you feel that India will continue to grow at a robust pace, or do you see growth slowing down in 23-24?
Few things, Shweta, we must see that we managed COVID well, both during COVID. First phase, the rural area held up well. Second area, the urban areas came back very quickly, and the vaccination program was a great success. And then the poor were protected through Garib Kalyan Yojana. So I guess the leadership there could give world a signal, and domestically also signal that, in bad times things can be protected. So there is a sense of, across the country and globally too, of a sense of security and stability because of that very, very deft management. Secondly, banking sector in its pink today. I've never seen it healthier. If you see the public sector banks, their credit, I was looking at the numbers of expected credit loss, they are almost sniping the private sector in their heels. They are almost a similar level. Of course, their gross NPAs are still high. They have some more scope of improvement there, but they are very, very low. And their credit deposit ratio is, especially public sector bank, is much lower than that of private sector banks. So there is a space for investment. That is a second huge positive that I see today. Third is the formalization and digitization, which have gone hand in hand.
Sure.
So that is the third push to the economy, because you must look at the drivers for the economy, and unless we don't look at the drivers. And fourth, as I mentioned, I see IT getting a big push on account of the global happenings. In that kind of a scenario, issue on inflation for the first half on account of sticky core inflation, which is sticking above 6%. I do feel that inflation fight would continue for some time, at least next couple of quarters.
Okay.
So we should expect interest rates also to be a tad higher. But they have been in this range earlier too, and I think our investments can take that into account. I do see on account of these factors and the consumption continues to grow, our growth rate should be in the range of 6%. It will be helped by the domestic consumption as well as the remnants of the base effect, which would continue at least in the first quarter, and thereafter we will be largely on our own steam. And the other part is, you mentioned interest rate, fiscal deficit, inflation, they work out a triad of sorts. And controlling or giving a trajectory for lowering of fiscal deficit would be a very good signal, not only to the inflationary expectations, but also a good signal for now crowding in the investment, which otherwise tends to feel that possibly the rates would go up and investment gets crowded out. So I guess that is how I look at. I do look at 6% growth rate, certainly.
6% growth rate.
Okay. And inflation getting more benign in the second half. But then last year was a year of unpredictabilities.
Sure.
This year, those unpredictabilities have, of course, come to the fore, but they have a probability attached to it. They will play their part. Oil price, for example,
sure.
And the global recession, how deep it gets. As we have certain expectation for this to remain reasonably benign, but then it's for future too.
Thank you so much for your time.
Thank you. It was such a pleasure talking to you.
Thank you.
1st February 2023, the Finance Minister Nirmala Sitharaman will present the last full union budget before 2024 elections. India's most awaited financial event comes in the midst of global slowdown, inflation, liquidity tightening, geopolitical tensions, and re-emergence of COVID-19. Will India look to fire up its manufacturing? Will India build a moat against global uncertainties? What will the budget have for the middle class? Watch the complete coverage of Budget 2023. Real-time analysis, expert takes all day on Moneycontrol. Log on to www.moneycontrol.com for more.